platform for the early stage founders and futurepreneurs, where we give out magazines like Harvard Business Review, where we have very detailed founder columns as well as investor columns, and apart from that, very detailed industry reports, which go on to explore all the know-hows of how that specific industry works, where we have covered sectors like defense tech, space tech, AI, and many other sectors from a very long amount of time. And after do like we are launching the fourth edition. We've already launched it for pre-orders. You can check it out on the indiandream.club. But just giving you a brief on how the fourth edition is, that we have covered four sectors there, from agentic AI to immersive tech to then digital health. And we have covered startups like Fitter, Visit Health. We have Adya AI and more other startups who've actually given out how they are building in such a competitive market, and such industry levers where the funding is a bit dried up. Plus, at the same time, how are they building a moat which is different than what others are building in, again, a market where every problem is almost identified and being solved for. So that is very interesting. And plus, we celebrate founders who do not have a very high PR, right? That is where we also make them exposed to different people, where they can know about that. Okay, these are the things which are being built in India, right? So yes, that's about it. Should check out the fourth edition. We've really worked hard on that, so I think that will be very helpful. Yes, I think sir is here. Hi, sir. Welcome again. Your camera looks
Hello.
perfectly fine. A very good morning, sir.
Hello, can you hear me?
Yes, perfectly audible, sir. Am I
I
audible to
think
you,
you're in
sir?
mute. I can't hear you.
Okay. Am I
Hold on one
audible,
second.
guys? Everyone else? Hello. Yes, perfect. I think yes. Okay, guys. One thing I want an answer from you, that how many of y'all as an audience are entrepreneurs? Can I have a yes of whoever is an entrepreneur? Yes, NS Rao says yes. Okay, Anoop says yes. Yes, anyone else, guys? Yes, Akshay Kumar. Okay, perfect. Right, and any key takeaways you want from this session that I can keep in my mind, so that y'all don't go away without anything, like anything you'll have in your mind. Gotten so many yeses. I mean, we're full of entrepreneurs in the room.
Okay, good. Okay, perfect. Finally got. You can hear me?
Yes, sir. Yes, you're
Okay.
perfectly audible, sir. Am I audible?
Yes.
Yes. Sir, again, a very good morning and welcome again. And thank you so much for giving us your time. Without wasting further time, sir, I'll go up with my first question. Is that fine?
Yes, sure.
Yes. So my first question is that you call yourself a typical mix of an engineer and an MBA, right?
Yes.
And you've been a techie, a founder, and a product manager, and now you're an investor. Of all those hats, which one do you find yourself wearing the most when you are sizing up a startup today?
Well, it's largely the investor hat because we're making an investment decision. But an investor hat is a mixture of just classical investment decision, which is a financial decision to make an to send money to a startup and return for equity, of course, and to realize IRR and gains. But
Right.
sizing up a startup also draws upon years of experience in the operational areas you mentioned, product management,
Right.
engineering, to ensure that a startup has a truly defensible technology, a moat that can sustain the test of time, that they have the sales and marketing capability to capture good chunks of the market and sustain in the mid and long term. So it is an
Mhm.
investor hat, but the investor hat is a function of many areas, including financing, venture capital, marketing, sales, and engineering.
Right. That's interesting, sir. Also, sir, coming back to, Anthill. So Anthill's whole idea is helping a startup across the chasm, that brutal stretch from pre-series A to series A and B. For the founders here who've just found some traction, what actually makes that stretch so deadly, and why do so many good companies stall right here? Like from series, like pre-series to series A and B is actually one of the toughest period for all the founders.
Right. So it's largely two things: not able to raise funding and not able to
Yeah,
get a critical mass of customers,
right.
which in many ways are tied together. So many startups start off with a compelling technology. They reach from an
Hmm.
engineering standpoint the beta, post-beta phase. They get a couple of early customers from their immediate network, and then some kind of stagnation starts, which is the
Hmm.
chasm, right? They
Right.
cannot, let's say it's an enterprise startup, then they cannot scale to 50, 100 customers, the kind required to get a sizable Series A or even a pre-Series A, and or they cannot raise funding, so they might get significant amounts of customer interest, but then you have to scale your team and engineering, support, sales, marketing to support,
Hmm.
50, 100 customers, and they cannot raise funds for the numerous reasons, which is why the mortality rate of a startup is highest between, let's say, a friends and family round and a seed slash pre-series era.
Correct, correct. So, sir, do you think that is a problem of proof of concept, because raising from family and friends is way easier because there's a certain kind of emotion involved there. But when it comes to raising it from a a professional VC or any other fund, it's there's a different kind of structure which they follow. So there's a problem of proof of concept. Do you think so?
Yeah, I think you answered the question at least partly. Friends and
Yeah.
family around the people who've known you for a very long time, and they tend
Hmm.
to be very forgiving of
Yeah.
you know shortcomings in the business plan or product features or things like that. So they
Right.
invest in you because they're aware of your capabilities, typically from a very young age, and
Hmm.
there's an element of emotion there. But the moment you go outside your immediate circle, people are
Yeah.
far less forgiving of anything in your business plan, pitch deck, down to the most minute things. So it becomes exponentially harder to raise from people outside of your immediate network, and that's where a lot of the issues start cropping up.
Correct, correct, sir. So one thing I would want to ask you is that in the conversation, in the in one of your answers, you said that stagnation hits, right, and that is the chasm. Like, could you just put more light towards that? Like, if you can give an example or some kind of a metaphor which helps us understand that better. Like, how does that stagnation hit?
Yeah. So there's a founding team, typically two people. Maybe they
Right.
bring on one engineer, sometimes part-time, sometimes fully on board for largely equity-based compensation, and a couple of interns, right? So I see this a lot. So they build out, like I said, they build out a product. They get a couple of POCs, even paid POCs, and there's some
Hmm.
early success, and or they raise a friends and family round. So there's
Hmm.
some level of success that happens in the first 12, 18 months.
Hmm.
Then you have to grow from two customers to 20, right? It requires a different kind of an organization.
Correct.
It requires a team of 8, 10 people. It requires funding. It requires a lot of other things to act like a startup that can support 10 to 15 enterprise customers. And that's where the metaphor is a chasm. It's a big like a valley where you have to jump
Hmm.
across from one side to the other to
Hmm.
embark on your next growth trajectory, which a lot of startups fail to do because
Right.
for various reasons they're not just not able to cross that chasm.
Correct. Correct. Fair enough, sir. So, sir, you've said often in your different other interviews or your LinkedIn posts or other content that that founders often lose focus the moment they hit product market fit. That is what we discussed in the last question too, right? But that real work starts after. What does the real work look like, right? And what's the first thing you tell a founder to fix once the product is finally clicking?
Yeah, I think just to correct that slightly, they do achieve product market fit to the extent that they get a couple of POCs, and at least it's proven that there are people that need a product. But product
Right.
market fit means that you have to capture what is commonly referred to as a beachhead, you know, a,
Right.
a critical mass of 30, 40 customers that renew every year, so they don't churn away. That you have an organization, both engineering, support, marketing, that can support this growth, right? Because
Hmm.
enterprise customers typically always want better capabilities, better features. They need a level of security for sure. They need support. So teams often struggle with that. I'm
Hmm.
talking, enterprise customers, enterprise startups here, but the same also applies to a consumer-based startup that you can get a first 5, 10,000 customers, but then when you want to scale to 50,000, 100,000 consumers,
Hmm.
you need a different set of capabilities, which many founders struggle with.
Fair enough, sir. Sir, so like again, out of curiosity, what kind of startups do you tend to invest more out of just like coincidence, if it might be? Is it more enterprise startups? Are these most consumer-facing startups?
I've been most active in the healthcare area at
Okay,
Anthill and even otherwise, a little bit in sports tech now through a fund called Press
right.
Play Capital. So they tend to be both. It can be, if it's a medical devices startup, they sell
Hmm.
directly to hospitals and clinics and doctors. So those are by definition B2B. And then
Correct.
there are others in diagnostics, for example, that are both B2B and B2C. They sell directly to
Hmm.
customers, where something can be ordered directly from a website, for example, or
Hmm.
other consumer channels. But they also sell to other institutions like hospitals and clinics and all that do testing for patients. Uh,
Right.
so one startup that I'm very closely involved with is Early Sign. It's the brand name. They do early cancer
Okay.
detection using saliva.
Oh
Yeah,
wow.
it's a groundbreaking technology, the first of its kind in India. Uh,
Right.
all they take from you is a small saliva sample, and
Hmm.
in a few hours they are able to give an indication for for cancer at the pre-cancerous stage, low, medium, high. It's brilliant. The innovation is just stunning. It's based out of Nagpur, and the technology is first of all really powerful. It's non-invasive, especially as
Hmm.
compared to biopsies or blood draws.
Right.
It's we plan to enter the market in a couple of months. So I can't reveal the pricing, but it is priced for the masses, so it's not
Right.
very expensive. And detecting cancer early, we all know, is literally the difference between life and death. I mean,
100%.
these days you detect cancer early, it's curable in most cases, or at least containable, right?
Right.
So that's the kind of innovation that really excites me, and it's one that is is something that is really compelling for the Indian market.
Right. So, sir, like as you said that this is a honestly one of the most groundbreaking technology I have heard until now, right? In healthcare, that you can detect cancer on pre-cancer basis and just with the help of saliva, right? I'm assuming that it is a product which can be I can bring it to my home, or should do I have to go to an hospital for that?
Yeah, I think once it's available in the market,
Right.
you can order it directly to your home through diagnostic chain. I mean, I don't want to reveal too much of the
Yeah.
go-to-market
Correct.
strategy, but it'll be easily available at a very affordable price for the market, for the masses, I should say.
Correct. So, sir, like as like to build such a groundbreaking technology, you have a certain kind of background, right? Where you come up, like you might yourself have gone through a entire MBBS degree, or maybe more further studies, have been in practice since so many years, and then you figured out this problem, right? Assuming that someone who is as trained in healthcare wants to enter the startup industry, right? What would be the problem? Because you being one of the most prevalent healthcare investor, also you might have seen so many pitches, so many founders you might have met, right? Where a founder can enter the healthcare space in India, what would be that problem, or what do you think, where should they start, for the first?
Well, it's see, healthcare in India.
Hmm.
It started off with a lot of players that could deliver cheap medicines to your doorstep in 10 minutes or half an hour. So uh, yes, they are healthcare companies, but they're also in philosophy logistics companies in the healthcare vertical. They conquered the art of locating the right medicine and sending it to someone within half an
Mm.
hour or a few minutes. Then
Correct.
came a wave of innovation over doctor CRMs, managing the doctor-patient
Right.
relationship, follow-ups, medicines, interfacing with insurance companies, and creating e-commerce platforms around that. There was some
Correct.
innovation in that area. Then there was a lot of people that began communities, communities for the
Mm.
elderly, communities for people with this disease, for pregnant women, and all that. And again, interface that with products and services relevant to those people. So essentially, e-commerce companies building on top of community.
Right.
But one has to distinguish between healthcare and biotech, especially in India. So all the companies or areas that I mentioned so far were healthcare in India.
Correct.
Biotech means diagnostics, technology that can detect cancer early is true biotech in
Mm.
the
Mm.
diagnostics area. There's a
Right.
company out of Pune called Nucleovir, which is also extremely innovative. They have a product that targets
Mm.
something called GBM. It's a form of brain cancer, which
Right.
is very hard to contain or cure. If you get GBM, doctors often call it a death sentence.
Mm.
It's that
Mm.
deadly. So
Okay.
they have built a product, a powerful product
Mm.
using immuno-oncology and AI bio loops for getting
Mm.
data and constantly feeding it back to their algorithm to improve the efficacy. Uh,
Right.
so that is an area which is more biotech than healthcare. Now, what an entrepreneur should do to answer your question is, you have
Mm.
to, it's classical startup 101. You have to find
Mm.
a genuine, sizable problem
Mm.
uh, in the marketplace that you plan to enter that is not
Mm.
addressed by anyone else in an
Okay.
effective way. Yeah.
Mm.
You of course have to have a moat, either in
Mm.
explicitly through patents or otherwise through know-how that is above and
Mm.
beyond what someone else would do. So you have to think of it that if
Mm.
someone else were to start a company today using exactly what I'm doing, how much of a
Right.
lead do I have over them? 6 months, 9 months.
Mm.
There has to be some separation. Otherwise, if everyone can do it, there's no real
Mm.
business there.
Correct.
Bigger players will enter the market with, you know, maybe predatory pricing and just
Mm.
outprice you on the market. Smaller startups will copy what you're doing. There's no sustainability there.
Right.
And then once you identify the problem that you're able to solve on account of the strengths of your team, then you have to build out
Mm.
an organization, right? To go from idea to MVP to POC to sizable market.
Correct. Fair enough.
For that, yeah, you have to have a well-rounded team. You have to have entrepreneurial capability. You need to be able to be well networked enough to raise funds. It's a classical startup growth cycle.
Correct. It is startup 101 basically.
Yes, yes.
Right. Correct. Correct. So this brings me to my next question, which is regarding the digital health products right now, right? As I see a splurge of different products like a health ring or a health watch, let's say a Whoop or a Gabbit, right? And recently also we've seen one of the most prominent entrepreneurs like Dipinder Goyal working on something like Temple. What do you think? How big is this entire tech products related to health, and what do you think about that particular space itself?
The space in India is huge. I mean, even globally. But a lot of these consumer products, they really need to hit scale before they are provable.
Hmm.
I'm not saying that there's no need, but some of
Hmm.
these needs are like fads. They come and
Hmm.
go, right?
Hmm.
Uh, I would rather predicate a startup and would rather invest in startups where the need is genuine and long lasting. Like
Makes sense. Yeah.
cures, early detection or cures for cancer, diabetes, asthma. There's so many diseases today where there's no genuine cure.
Hmm.
Uh, And if there is, it's not at a personalized level. Cancer today still a lot of people go through chemotherapy, which is basically just the same treatment for everyone, and there's all the side effects. It's not personalized medicine. Uh,
Hmm.
Newer layers of innovation in immuno and other are improving this essentially. But
Hmm.
anyway, so this is maybe a long-winded answer to say that biotech innovation, once you make it to market, you're addressing a
Hmm.
real need where there'll be plenty of demand for a product which is not like a fad, because in the end, someone who's suffering from a disease,
Makes
will
sense.
always want to cure it, as opposed to someone who wants to just measure, how many steps you took, or things like that.
Correct.
That's it's great to have, but it's not a life and death scenario.
Makes sense. Correct. So one more way, please correct me if I'm wrong. One more way we can differentiate between these two parts to the healthcare is that one is just built for the rich, right? Because a temple or a gap, it cannot be afforded by a person who who is meant mass, right? Let's say a middle class person or even lower. And when you talk about, let's say that the preventive system of for cancer which you spoke about, right? That is something which is again a mass oriented system and has a very high value to it also. Am I right?
Yeah, but see, it all depends on how the product is built from an operations standpoint for a startup. Where yes, there are some products that are not affordable for the masses to start with, but it's not necessary. If you just do it right and the unit
Hmm.
economics are right, like
Hmm.
early sign again, it's
Hmm.
built for the masses. So early
Correct.
detection of cancer, it can be for anyone. And
Hmm.
then if it is highly priced for a small section of the people, then that can be addressed through let's say insurance areas, or governmental support and things like that. So
Hmm.
it can be
Right.
part of different uh, ways to address the pricing problem, basically.
Right, right, right. So, before coming to my next question, I would like to open our first poll for the audience. Please do engage with the poll and answer the question that is really important to, for the entire session also. So, yes. So coming back to my next question, recently I was talking to one of the prominent entrepreneurs in the healthcare system itself, as
Mhm.
an interview for one of our magazines. So one thing he mentioned was very vital for healthcare industry in general in India is the public infrastructure. And the
Mhm.
public infrastructure right now is very poor for healthcare industry to boom in terms of mass. Right? What do you think about the same? And would you like to say about anything?
The public infrastructure, could you elaborate
Yes.
on, like?
So basically, public infrastructure, as in that the government is not as much supportive in terms of these healthcare startups booming, right? For example, let's say coming back to the preventive cancer product, right? If that product gets a significant subsidy from the government to actually go ahead and put their product into the market for mass, now that would solve a very big problem for the startups in general, right? So
Okay.
government support in general is not as much effective for the healthcare startups in India right now.
It's debatable. See,
Yeah.
governmental support comes in a couple of ways. It can come directly in the form of subsidies, but it can also come in the form of grants, which I think the government has done a fair job through BIRAC and other agencies, where a lot of startups that have done some genuinely good work qualify for these grants, which, by the way, are completely non-dilutive, which means
Right.
that there's no equity
Hmm.
given, or it's just certain conditions have to be met. So it's great for the startups and their growth cycles and sustainability.
Hmm.
There's also
Right.
a fund of funds that is being created for deep tech and other areas where a lot of the focus is on biotech. So I think some
Correct.
real efforts are being done in this area to support startups
Hmm.
in the uh,
Hmm.
biotech uh, vertical, shall we say.
Right.
But yeah, on the demand side, I think maybe the jury is out. The government does play some role in procurement and let's say mass screening for cancer or things like that, but probably more can be done.
Correct. Fair enough. Sir, from a business point of view, what do you think in healthcare as a main industry, where does the main money lie? Is it preventive healthcare? Is it pharmaceuticals? Is it digital health? Or is it anything else? Like, what do you think where the main money lies, where the main bottom line actually starts generating?
It doesn't have to be one area. I think diagnostics will be a big area for India moving forward because people are slowly moving away from reacting to diseases to proactively avoiding diseases. This is a
Hmm.
function of the growth of our economy and the wealth effect, and people
Hmm.
being able to afford preventive medicines and
Hmm.
diagnostics, and also a function of being better educated. So
Hmm.
I foresee this being a large growth area in the next few years and decades. Same for
Right.
better treatment, and it's a lot of areas which will grow again just as a function of the growth of the economy and the growth of the buying power in the country. So.
Correct. Correct. Fair enough, sir. And sir, my next question is like moving out of healthcare. What do you think is one of the most sustainably built industry in India, which will actually make India a very high developing economy in the world in the coming 5 to 10 years?
See, from a startup lens, I think fintech and edtech will continue to grow. I think
Okay.
both these areas, there's a natural propensity to as people become more affluent to invest better, and then for tools to uh, help them invest either algorithmically. I don't necessarily recommend that, but
Hmm.
it's I'm seeing it. To manage their money to invest across different asset classes, some of which are not easily accessible. So fractional
Correct.
ownership and a lot of business models built around that, as well as to invest outside of India. So I think there'll be a lot of innovation or growth in helping people that are have a lot more discretionary income now and spending capability to invest in India and outside,
Makes
and
sense.
to manage those investments. Same thing for EdTech. I think it's largely driven by exams like JEE and NEET, but there's lots of people that want to have a world-class education now. So
Right.
preparing for these exams is extremely competitive, as we
Right.
all know. And
Yeah.
to better prepare for these exams, for the study material to be presented in one way or the other, depending on your ability to learn, like say, wrote through examples, through metaphors, through analogies. We'll definitely continue seeing innovation there, and then one-on-one tutoring
Hmm.
on any area and on any topic is something that people will want. Uh,
Correct. Sir, I mean, it was very interesting for you to say fintech and edtech because edtech is one of the most looked, most in industry where people have like since the last 6 7 years, there are companies which have been dying. We've seen from Byju's to an academy to
yeah,
different other companies, which have actually raised a lot, had a very big infrastructure around them, but then ended up still, struggling a lot. If I'm not wrong, physics wala even after being public is also still trying to manage how to build sustainability, or what product is actually the one which they want to scale ahead or will make them the most amount of profit, and still ends up being loss making. So sir,
correct.
why do you still say that edtech is the one which still make India one of the most emerging economies in the world, like even after such
Well,
money has been
so
lost in
physics
edtech?
wallah was a perfect example. Yes, Byju's was a
Mhm.
big down dampener to the
Yeah.
spirits of entrepreneurs in edtech. But then physics wallah and its IPO was
Yeah.
really like some kind of a renaissance for the edtech
Yeah.
industry in India. And it proved that a company could go public, a simple YouTube channel at least to start with, to teach
Right.
something like physics, which a lot of people think is arcane and difficult to understand, and it's just for a select few. Uh,
Correct.
Look, I think why the sector is interesting is driven by the demand.
Mm.
You have
Right.
a lot of people across the country that want to have how how to do well at comparative exams,
Hmm.
and both internally and externally, right? So now there's a section of the population that is affluent enough to afford educations overseas. So
Correct.
there could be some layers of innovation that form there to help prepare you to build the right profile for education in the UK and the US or other geographies.
Hmm.
And within our country, again, back to the JW and NEET, people keep talking about that, but there's a lot other exams, civil services, upskilling, AI.
Right.
There's so much to be learned, and there are people that have the capabilities to match those people to create content, subject matter, and to present it in a way
Right.
that people understand it well through text, imagery, video. I think there's a lot of scope there. So, continuous learning. I think Indians are inherently, you know, they seek more knowledge in areas that will
Correct.
benefit them. And I think that's the driving force behind EdTech in India.
Correct. I think, sir, one thing which is backing what you just said is that I recently read about that KKR is going to invest in one of the schools
Yes,
in Gurgaon. I think Pathways is the name of the school. So that was very interesting
yes.
for me to see, because the thing is that something like a school, which is it's a school takes time to be built, right? For example, for the first 5 to 10 years, there would be a very high CAC because no one knows about you. But after that, slowly, steadily, your CAC goes to zero because affiliation is what works the most for the schools.
Okay.
So yes, there was really interesting points. So, coming to my last question, and then we can go on to audience questions. Is that you've been an entrepreneur, you've been an investor, and like as I've asked all the questions from an me like for the entrepreneurs, I would last to ask one question for the investors, who like someone who has let's say a certain kind of capital. Let's say they have 5 crore to deploy, right? How should they start their investing journey? Like any questions, like any help which you could give them would be really helpful. Like they are obviously early stage investor. Like how should they start? What sector should they focus on, or should they be sector agnostic? If you could let us know about that.
If you have 5 crores, it's a decent sum. You start off as an angel investor. I guess theoretically you could try and think of raising a seed fund also. I mean, as a
Okay.
GP,
Hmm.
you can think of a small fund, let's say in the range of 50 CR, and you and a partner put in a total of 2 CR, 2 to
Hmm.
3 CR, maybe, and you can think of raising a seed fund. That's one way to think about
Okay.
it. But if you just want to go directly into startups, there's a lot of angel platforms that do a wonderful job of screening and vetting startups.
Hmm.
IAN, Mumbai Angels, is
Right.
one great place to start. Uh, in some ways, you also have to do a bit of a selling job. Prominent angels
Hmm.
in India, they are pretty
Hmm.
active in the media, on LinkedIn, and things like that.
Right.
So, you know, Sanjay Mehta, who started 100x.vc, was a very prominent angel investor.
Right.
They get deals directly on LinkedIn. I mean,
Yeah.
so you don't even need intermediaries like angel platform necessarily.
Hmm.
So
Correct.
it's all a question of building your own persona as an angel investor that truly adds value to startups, and deals will come through you from LinkedIn or otherwise.
Right. Perfect. Perfect. And so, like again, out of curiosity, as you have been an entrepreneur and an investor, like right now you're an investor, obviously. But what
Mm.
did you enjoy the most, being an entrepreneur or being an investor?
They both have their joys and
Yeah.
challenges, but I
Right.
think the best thing of being an investor is you get to see many different ideas in one typical day.
Correct.
You get to see business plans from edtech, fintech, healthcare,
Hmm.
biotech. In that area, also you get sports tech.
Hmm.
There's an emerging area called cricket tech also, which
Wow.
So I think you get to see a wide gamut of ideas and innovation. You get to meet a lot of entrepreneurs from across the world, not just India,
Correct.
which is probably the most rewarding part of being an investor. An
Right.
entrepreneur, of
Makes
course, has its
sense.
joys. You build
Yeah.
out a team, you build out one idea, you take it from right from the
Hmm.
idea stage if you're successful all the way to IPO or a favorable exit. So that has its own joys. But I
Right.
think what differentiates is that if you like seeing different ideas and partaking in them, then investor's journey is very rewarding.
Makes sense. Basically, an investor will make you an operator across startups, but as an
Correct,
operator, you are just building your own company.
correct,
But
correct.
you take it to different heights. So yes, and you are 100% in control of that. Yes, fair enough, sir. Yeah, thank you so much for answering all the questions with so much patience, sir. Now I'll open the stage for audience questions. I'll take some which have been previously also questioned, but please throw your questions away, guys, if anything else. So yes, we have a question from Akshay Kumar, sir, that he's asking that how about energy and energy storage sector?
It's a big area, energy storage definitely, because
Hmm.
we're definitely everybody wants to move to clean tech. The geopolitics and all that now almost mandate that we continue our journey in clean tech and try and use the vast resources the country has. We have
Hmm.
with an average of 300 days of sunlight in a year. We
Right.
have wind, so all that has to be harnessed. Now the issue is that when the energy is not being generated,
Hmm.
how do you supply it, right? So you have to store it. So energy storage, which is
Right.
a function of clean tech as well as pure software and AI and data,
Hmm.
is an area that is ripe for innovation. I'd love to see startups come out in those areas.
Correct. Makes sense. And sir, before I go to my next question, guys, everyone who's present in the audience, we are coming up with the second poll question. Please do engage with it and also throw your questions, as many as you all have. Like we'll take some of them. Yes. So next question comes from NS Rao, sir. He has asked that what do you specifically look for at seed stage when we have a demo and founding team in place and going for a fundraise?
Again, the answer to these questions is I tend to be a little bit philosophical. You go
Mhm.
into what I look for is that a team can take a startup from point A to point B. So if
Yes.
I'm looking at a seed stage investment, does the founding team and the technology they are building and marketing go from seed to Series A? Do they have the
Correct.
capability either through a truly genuine product with a defensible moat, or
Hmm.
a founding team that has the ability to growth hack in India and
Right.
globally, or the right combination of the two to take it from to C to Series A? So, I mean, purely
Hmm.
arithmetically or financially, if I'm putting in 1 CR, of course, I'm thinking,
Hmm.
will they be able to make 5, 10 CR for me? Everyone thinks that way,
Right.
but that's maybe you know a small part of it. The main thing is that you have to be
Hmm.
able to convince an investor that you can build a
Hmm.
sustainably growing company in the next 5, 10 years. That your
Makes
team
sense.
has both the technical chops and the
Hmm.
marketing street cred to build a great startup.
Got it, sir. Perfect. Sir, next question comes from Wilfred Xavier. So he asked that in the context of edtech, when you compare the various platforms, what is the moat that separates them? In the face of free content available, how does an edtech compete? Is edtech scope limited to competitive and certification? If all startups use off the shelf APIs, where is the moat really? So he has asked three-part questions, but a really good question is what I suppose. Let me just break it off for you. So
Okay.
first part to the question is when you compare the various platforms, what is the moat that separates them all?
It's, you know, you have to have something that a consumer wants, right? And that someone that is willing to pay for. If you would
Correct.
have to answer it very simply. So either it could be content, it could be teaching capability. Let's say I'm taking a comparative exam or I'm upskilling
Hmm.
myself in certain areas,
Hmm.
and you have content which is very difficult for me to gain elsewhere, and then
Correct.
you learn you gauge my learning capabilities and present this content either through AI or other technologies in a way that makes my learning more effective and more. accessible, then I'll be
Right.
willing to, if I'm able to pay for it, I'll pay for it because I stand to gain a lot.
Correct.
So
Makes sense. And sir, one more thing would not be that, for example, if I compare an academy with physics wala, an academy's distribution was all inorganic. So they have to pay for all the customers which they get because
right,
they grew their YouTube channel later. But with physics wala, their distribution was free. So they are that was one thing which helped them survive also. Apart from
right,
that, sir, I don't think in the main 4 5 players of edtech, apart from upgrad, there's a more of a business model differentiation. Every company is working on the same model of hiring or outsourcing teachers, getting the distribution through content, and then running different courses off.
right. Yes. So you then, if there's no differentiation necessarily in the content or the way the content is presented, then it's a question of pure execution. Then at the startup level, you have to just execute well. If you find an area where you have
Hmm.
favorable unit economics,
Right.
then the ones that raise money and convince investors that they're able to scale,
Hmm.
and they do scale. Uh, so
Correct.
at some point, it comes down to plain execution. There is a
Hmm.
differentiator in, and then the rest of it is business execution, which is classical startups again. People that uh, execute best on a certain business plan will succeed.
Makes sense, sir. So next question comes from Mohammad Zabi Umez. Which metric is the strongest in the earlier stage of the healthcare business, considering early traction? How does the narrative founder background play a role in this sector industry compared to the others? I think halfway we've answered this in our conversation only, but please continue.
Yeah, the second part of the question is founder pedigree and is always
Yeah,
important.
so the correct. Yeah, yeah,
Uh, where you studied, what you've done before the startup, uh,
yeah.
co-founder affinity, all those things definitely have to tick the right boxes. Uh, the more, the better. If you educational background, extent of patents, know-how, where you've worked, what skills you've achieved, that definitely helps. But it's true for healthcare for any other startup. So I think it doesn't necessarily matter more in healthcare versus, I guess, unless if you've done your research at some really stellar institution and you've developed a know-how there, it does help a lot in healthcare, and maybe it helps slightly more in healthcare than other industries.
Correct, right.
Now, the first part of the question was about, sorry, was it about scaling or was?
Yes, sir. Let me repeat it for you. So the question was that just a second, sir. I went on to
Mhm.
the next question. Yeah, yeah. So the sales cycle can kill you, and
Oh no,
hospitals
sorry,
doctor took
I
your
think, sorry, I think the question was which is the strongest metric. I just recall now.
right. Which strong in the early stage of the healthcare business.
So I think today across sectors, unit economics and profitability is proving to be very critical. Uh,
Correct.
is just because across the investing community, people are looking a lot at these metrics to gauge the sustainability of a startup. So
Right.
it's more a question of macroeconomics rather than the intrinsics of a specific industry.
Fair enough. Correct.
So yeah,
Correct. So, next question comes from Akshat Jain. You've built and structured funds yourself. For the investors and aspiring fund managers in the room, what's the one thing about running a fund that nobody warns you about until you're in it?
I think you have to understand the intrinsics of running a vehicle where the people have invested into your vehicle
Hmm.
in a 7 to 9 year timeline and have the discipline of running that. One has to do that to really understand. Your first one itself and only will teach you how to do that in the long run.
Hmm.
And there's lots of nuances there in terms of you know making disciplined investment decisions, making the right choices in terms of personnel and the timing of raising a fund and seeking exits and all that, which are a lot to recount here, but essentially
Correct.
running a fund, you have to think of yourself as managing someone else's money and delivering returns in a timely manner, which requires a certain level of discipline, which is not there in other investing journeys, let's say as an angel or as a public market investor or things like that.
Correct. Fair enough, sir. So next question comes from Prajwal Jagdale. How shall a deep tech startup having heavy capex proceed from early stage, especially in fundraising journey?
If you have heavy capex, you have to raise more, right? So uh, the deep tech investing climate in India is getting better. So there's a lot of investors focused on deep tech. That's the good news. But then you have to again get that early traction. You have to build out POCs to prove the market demand for your product. And then you have to build an organization, at least the early team, to convince
Hmm.
people that you are indeed the best team to build a sustainable startup in this area.
Right.
And you have to raise more. So you just have your fundraising, outreach, and your activities have to be aligned with the raising 10 CR, where others could do 2 CR, for example. So,
Makes sense. Makes sense. Sir, we'll take the last question. So the question comes from Akriti Gupta. You back founders with a moat that lives in their heads. Hard won know-how, not just a patent, right? As an early founder, how do I show you that kind of moat when it's not something I can put on a slide?
we, it's harder, I agree, marginally if you don't have an explicit pattern, but you have to, like, we are talking about interactions with investors, right?
Right.
You can put part of it on a slide. You just have to say that you have a know-how. You have know-how
Mm,
that is hard for others to achieve. And
mm,
how would you let's say your team has 4 PhDs from
right.
IIT or BITS or something like that. That's it's not everyone has that. So
Correct.
they'll end up having know-how that
Right.
other startups cannot boast of. For example, you have to point to work that you've done in academia, in industry, in research, in publications, in white papers, or any
Mm,
other areas that shows that your team truly has that gray matter that nobody else has, and nobody else can. If they try and replicate it, won't be able to do that. Yeah, in the near future. So the know-how acts as a defensible moat.
correct. Fair enough, sir. Fair enough. So last question again. I'm really sorry, but people have been requesting to get this question. So this is from Vinay Nandiala. Once we have MVP available with us, what would be the right strategy reaching marketing team or investing forums? If investing forum, which platform we have to choose?
There's a lot of platforms. I mean, I can't. Uh, you can go to angel networks like IN. I'm assuming you're talking about fundraising, right? So uh,
Yes.
this is a multi-part question. Yes, you can. I'm happy to provide advice, by the way, one-on-one on different platforms, including LinkedIn for this. This is what I do also. But people that are well networked, for example, no angel investors, alumni, relatives, So it's not even necessary you have to go through a platform. There are platforms like Angel Networks, IAN, Mumbai, Chennai Angels, our Ventures, and all, which help
Correct.
you help connect you to investors. But there's definitely value in that if you're not intrinsically connected to those investors. And I think there was a question around the timing. So timing is almost impossible to pinpoint exactly. But if you
Mm,
have most of the tick boxes, which is
mm,
a product that is at least post beta, POCs that
mm,
are genuine and will result in revenue, a part to revenue that is visible and believable, and the founding team is well rounded. I think you have most elements in place to go out for a fundraise.
fair enough. Fair enough.
And
Thank you so much, sir. Yeah. Please
yeah,
continue.
yeah. Revenue is becoming increasingly important these days, just for the whole
Yeah.
investing fraternity. So uh, once you have that, it's easier. Basically.
Right, basically it's proof of concept also in a way, right? Once you
Yeah,
hit revenue, that means that people really want your product, and that will
right.
help you scale further. Yeah,
Revenue and
very.
profitability are getting increasingly important. People, investors across the spectrum are becoming more risk averse. It's just a function
Right.
of what many people are saying is some kind of maturing in the startup ecosystem.
Correct, correct. Yeah. Thank you so much, sir, for the all the people asking questions. I'm really sorry in the lieu of time we can't take any more questions. I would like to thank Devang sir for all the time he has given us today, and really he's been really patient in answering all the questions. And yes, so thank you so much. If there's anything you would want to say to the people, please feel free.
No, thank you for taking time out on a Sunday morning. It was great interacting with all of you. Some really good questions. And as I mentioned, I can be reached directly through LinkedIn. If you have any further questions, I'd be happy to entertain them. And I look forward to hearing from you, and congrats on your respective journeys.
Thank you so much, sir. Thank you.
Thank you.
Yeah. Yes. For all the people in the audience, yes. So, sir, if you want to leave, you can leave the call. Yeah. Yes, for all the people in the call, please do check out the Indian Dream Club. We will be doing constant webinars around every week, every month, twice a week, alternate weeks. We'll be bringing more such prominent investors on the line. And do check out the Indian Dream Club. Our memberships are there. These memberships don't only allow you to read the magazine, but they give you an exclusive access into content and networks which ISN Indian Startup News brings on for you. We will be doing more offline events also under Indian Startup News and the Indian Dream. So please do keep a check and buy the membership as soon as you can. Thank you so much for your time. We'll see you in the next episode of the Investimonial. Thank you.